Bismillahirrahmanirrahim. Alhamdulillah. Wassalatu wassalamu ala Rasulillah Muhammad bin Abdullah wa alihi wa sahbihi ajma'in. Hello everyone. I am Ahmed Al-Rufai, the head of Sharia compliance in the International Islamic Financial Markets IIFM. And welcome to today's webinar hosted by IIFM on the launch of its template Sukuk Al Mudarabah, standard documents for Perpetual Mudarabah Sukuk Tier 1. And I greet you all with the greeting word of peace. Assalamu alaikum wa rahmatullahi wa barakatuh. Peace be unto you all. Good morning, good afternoon, and good evening, as per your locations and timings. Thank you for taking time out and joining us for today's webinar event. All praise is due to Allah Ta'ala, Alhamdulillah, along with the major financial institutions and others. We have also a significant number of participants with us today. Nearly 200 people have registered for today's event from different jurisdictions and countries. As for those friends who are not familiar or very familiar with the work and the mandates of the IIFM, IIFM is the main recognized infrastructure institution in the Islamic financial industry, mandated to issue master standard agreements with the objective of achieving harmonization, unification, and transparency in the industry through its documentation standardization process. In addition to other tasks that IIFM has taken upon itself to contribute more to the development of the Islamic financial industry worldwide. All these under the guidance of its esteemed board of directors, the distinguished, renowned scholars of its Sharia board, and continuous support of its members. IIFM Sukuk Al Mudarabah documents to be published shortly have many unique features. Among these, important features in brief, such as the governing law, how it is drafted to provide some kind of flexibility for all parties, excellent solution for ranking and subordination. As we know, this is the key feature of Tier 1 Sukuk instruments under the regulatory capital regime. Non-distribution of profits, how it is drafted in these documents to ensure its compatibility with the Sharia rules and principles. And other features that respected Mr. Ijlal and respected brother Ahmed of Clifford, the legal counsel who work hard on these documents, will explain in detail. These documents, ladies and gentlemen, were approved by the IIFM Sharia board, which is made up of prominent renowned scholars representing various jurisdictions. The use of these documents is not restricted to IIFM members only, but any Islamic financial industry participant can use them. It is our hope that these documents will greatly enhance market practices regarding the issuance of Tier 1 Sukuk Al Mudarabah. Bi-idhnillah. Now, ladies and gentlemen, we'll now hear or listen the welcome and keynote speeches from two prominent individuals in the industry. The first speaker is the Honorable Mr. Khalid Al-Hamad. Mr. Khalid is the chairman of IIFM, the executive director of banking supervision at Central Bank of Bahrain, Mr. Khalid's foresight and passion for developing the Islamic financial industry are indisputable. They are so important and valuable. We thank you, Honorable Chairman, for committing your precious time to help the industry in general and IIFM in particular moving forward. Please allow me to introduce the Honorable Chairman of IIFM, Mr. Khalid Ahmad, to deliver his welcome address. Over to you, Mr. Chairman. Thank you very much.
Thank you, Brother Ahmed, Sheikh Ahmed, for the introduction. Bismillah ar-Rahman ar-Rahim, wa salatu wa salam ala ashraf al-anbiya wal mursaleen, Sayyidina Muhammad, wa ala alihi wa sahbihi ajma'in. Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. It's my pleasure to welcome you all to this webinar at the issuance of Sukuk Al Mudarabah standard documentation templates by IIFM. While Wakala and Ijara are among the most popular Sukuk structures used by sovereigns, quasi-sovereigns, and corporates around the world to raise money, risk-sharing structures such as Musharaka and Mudarabah have long been the aspiration of the market. It is therefore an important milestone that IIFM has come up with a standard template for Sukuk Al Mudarabah, which will make it easy for an issuer to opt for it if the investors are willing to share the risk and returns. The development of conventional financial services markets over the past years did not shape up well without the self-imposed push by the industry and regulators around the globe on the standardization of prudential regulations, accounting treatments, market practices, and master agreements, etc. That led to the establishment of several standards-setting organizations, spearheaded and financially supported by the industry, such as ISDA, ICMA, LMA, PAFIT, etc. We witnessed the establishment of the Basel Committee, IOSCO, IAIS, etc. All such efforts are strategically directed towards the establishment of sound financial markets and its stability and sustainability. IIFM had been developing standards over the past years with the same cause and objectives, but covering the work of several conventional organizations mentioned above despite its modest financial resources. The world is presently facing an extraordinary situation due to COVID-19. The pandemic has affected both the real and the financial economy. Though Sukuk issuance were initially impacted, 2020 has turned out to be the best year for Sukuk ever. According to Refinitiv, there were US dollar 172 billion of Sukuk issued in the year, as compared to US dollar 169 billion in 2019. The reason is that fiscal pressures forced a number of countries to raise money through Sukuk to fund the generous support packages for their markets. Both Refinitiv and Standard & Poor's predict that 2021 will be even better as interest rates continue to be on the low side. GCC and Malaysia dominate the Sukuk market, each contributing approximately 40% of total issuance. While the adoption of IIFM standards has improved in recent years, it still falls short of the desired level. This is true not just for IIFM, but other Islamic standard-setting bodies such as IOFI and IFSB are also facing the same phenomena. Standardization is critical for rapid and sustained growth of an industry. Islamic finance has become significant in some markets with about 15 to 30% market share, while it is still nascent but growing in other markets. Standardization will provide a further boost to the industry. In this regard, regulators need to encourage adoption and even mandate it where necessary. Thank you, ladies and gentlemen, for your patient listening. I wish you all the best. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you very much, Mr. Chairman, for these thoughtful and encouraging words. Our second speaker today is the Honorable Dr. Adnan Chilwan. Ladies and gentlemen, Dr. Adnan Chilwan is a leading luminary of the global Islamic banking and finance industry and is renowned for being driver of change and innovation with immense contribution towards the development and advancement of industry. He is the Group Chief Executive Officer of the Dubai Islamic Bank Group, who has propelled the group to be a dominant force across the Islamic banking and finance industry with his visionary and transformational leadership. Dr. Adnan is also heralded as a progressive face of this industry for championing the cause of advancement of Islamic banking and finance. He has been acknowledged by international and regional Islamic finance stakeholders for his efforts in driving the globalization of Islamic finance. We at IIFM are fortunate that Dr. Adnan Chilwan has kindly consented to deliver the keynote address for this industry-defining initiative by IIFM in providing the global Islamic finance industry with a solution that will standardize the issuance of regulatory capital sukuk based on Mudarabah. I am honored to invite His Excellency, Dr. Adnan Chilwan, to deliver his keynote address. Over to you, Dr. Adnan.
Thank you, Sheikh Ahmed, for the very elaborate introduction. Ladies and gentlemen, Bismillah ar-Rahman ar-Rahim. I am first of all very humbled and excited to be in the presence of all of you today. It gives me immense pleasure in addressing this webinar as the keynote speaker for the next 5 minutes or so to mark the occasion of the publication of the IIFM standard Sukuk Al Mudarabah. But I'm not very sure what I can really add after my brother, His Excellency Khalid, Ahmed, has already opened the webinar today. As sovereigns, Islamic banks and corporates navigate through the current tumultuous economic climate, the Islamic capital markets, more specifically Sukuk issuances, have a pivotal role to play. The IIFM standard on Sukuk Al Mudarabah provides the Islamic finance industry the much needed standardization of approach, structure, and documentation in accessing the Islamic capital markets using an asset-light structure based on the principles of Mudarabah. I congratulate all stakeholders of IIFM, including the board, the Sharia committee, management team led by Brother Ijlal Alvi, working groups, professionals, and service providers whose collaboration has culminated in the release of this standard in the midst of these challenging times. In comparison with previous financial crises, the Islamic financial industry is better positioned to encounter the financial implications of the current crisis through strong governance, superior capitalization, better liquidity, and being equipped with cutting-edge technologies. The proactive measures adopted by the central banks across various jurisdictions to support the local banking and finance industry has ensured to bolster resilience and confidence across all stakeholders. It would also be opportune to commend the increased market support extended by Islamic standard supporting bodies such as IIFM to address the critical need for standardization of structures and practices across the Islamic banking industry. Despite the current challenges, the Islamic finance industry is expected to demonstrate organic growth in 2021, taking the total size of assets of this industry across the commendable $3 trillion mark. The growth of Assets constituting Islamic finance industry has been spurred by the contribution of the Sukuk sector, which comprises 25% of the total assets in the industry, by demonstrating a robust double-digit growth in the years gone by, especially in 2020. As various central banks across the Islamic financial services industry ease the regulatory liquidity measures which were adopted at the onset of COVID pandemic, Sukuk emerges as the potential resource to meet capital adequacy and liquidity of the Islamic financial institutions. The Sukuk issuance process has always found to be daunting for first-time issuers, with additional categorization of being complex and time-consuming. The new drive of central banks and security regulators across the Islamic finance jurisdictions, requiring greater threshold of Sharia compliance across all issuances, has resulted in a considerable gap between the expectations of the regulators and those of the issuers, especially from the issuers originating from non-Islamic jurisdictions. Standardization of Islamic documentation and initiative, such as the IIFM standard on Sukuk Al Mudarabah, acts as a bridge across the various stakeholders, affording the much needed clarity and certainty, streamlining the Sukuk transaction documents. Also, multi-level stakeholder engagements is warranted to embark on measures aimed at deepening the Islamic capital markets. We have witnessed an increased emphasis by central banks of systemic Islamic finance jurisdiction towards the adoption of robust regulatory practices as advocated by the IFSB and commitment to ensure conformity with the principles of Sharia as enunciated under the IOFI standards. In addition to these industry-defining measures, one must also commend the IIFM for their immense contribution to the Islamic finance industry with standardized Sharia-compliant financial contracts and product templates across liquidity management, risk management, trade finance, and Sukuk. Standardization of Sukuk documentation addresses the ability of Islamic banks and sovereigns to access the Islamic capital markets in an agile manner. The IIFM standard Sukuk Al Mudarabah documentation, which are based on international Sharia best practices, provides for robust documentation that can be adopted seamlessly across all jurisdictions. Resultantly, issuers will not only be able to ensure wider acceptability for their Sukuk, but will also be able to access the Islamic capital markets in a time-efficient manner. It is my privilege to continue leading DIB Group, the world's second largest Islamic banking group, which is acclaimed for being progressive and striving to make financial solutions simple, convenient, and accessible through a personal and engaging experience. At DIB, we have always embraced innovation and are committed to our values of being inclusive, collaborative, agile, responsible, and engaged. Sustained growth of the Islamic finance industry can only be achieved through enhanced collaboration and cooperation of the Islamic amongst the various stakeholders by adopting standardized Sharia practices. Being a pivotal stakeholder of the Islamic financial industry, DIB has supported the adoption of the IIFM standard documentation in our banking practice and shall continue to extend our support to the IIFM standard Sukuk Al Mudarabah documentation and future initiatives of IIFM. The reference rate transition is among the major resets impacting the way our financial contracts are drafted, our budgets are benchmarked, and our risk assessment strategies are designed. Islamic banks have an added layer of complexity owing to the distinct Sharia nominate contracts and their corresponding requirements. I have been updated that IIFM is working towards a unified approach for adoption by Islamic banks and would encourage all stakeholders to effectively contribute and agree on a sustainable alternative mechanism for our industry. As the Islamic finance industry braces itself to expand its outreach and charter new territories, it is pertinent to channelize our efforts through concerted and standardized solutions like the IIFM standard on Sukuk Al Mudarabah, which can be efficiently positioned and integrated within our current practices, transcending local and regional barriers, providing the requisite impetus to support the growth of Islamic capital markets. With this, I come to the end of my keynote speech, and I thank everyone who has participated in making this standard a reality today. Thank you very much. Wassalamu alaikum wa rahmatullahi wa barakatuh.
MashaAllah. Thank you very much, respected Dr. Adnan, for these comprehensive and meaningful remarks. We thank you for that. May Allah bless you. Barakallahu feek. Ladies and gentlemen, here is the program or agenda for today's webinar. One, launch of IIFM template Sukuk Al Mudarabah, and brief presentation by Mr. Ijlal Ahmed Alvi, CEO of IIFM. Two, key legal aspect of IIFM template Sukuk Al Mudarabah documents by our brother, respected Ahmed, he is the external legal counsel from Clifford. He worked hard on this document, as I mentioned earlier. And then we will have a stretch break. And thirdly, we will have Sukuk Al Mudarabah market perspective to be moderated by my dear honorable brother Haji Ismail Dadaboy, IIFM advisor, with knowledgeable professional panelists. And then we will have the closing remarks by respected Mr. Ijlal Ahmed Alvi, the CEO. Without further ado, I will turn the time over to Mr. Ijlal Ahmed to announce the release of these long-awaited standard documents. Over to you, Mr. Ijlal. Thank you very much. Jazakumullahu khair.
Sheikh Ahmed, distinguished guests, honorable board members, IIFM members, and all the participants, Assalamu alaikum wa rahmatullahi wa barakatuhu, and very good morning or evening or afternoon. It's indeed our pleasure to be now, alhamdulillah, launching this standard number 14 now from IIFM. These standards are, if you look at it in terms of their volume and in terms of its coverage, naturally we have to take into account all the aspects when you develop a document. So it has to cover the market practice, it has to cover your legal, it has to cover, of course, the Sharia and operational aspects. So this is combination. When you issue, the whole process naturally takes time. And IIFM, as our chairman also mentioned, we try our best to, be more sort of a value addition to the industry, and inshallah, as we progress with the support which is required for all the infrastructure institutions, including IIFM, we can inshallah contribute more. And as our chairman mentioned, we as infrastructure institutions have great role to play, as we have seen in the conventional market. We are also thankful to Dr. Adnan for his kind comments. Naturally, as a market leader, we want, and we need the institutions like TIB and all others, Islamic institutions, or the major players in the conventional side, which have Islamic activities like Standard Chartered Sadiq or Credit Agricole, and there are many. It will not be fair for me to, exclude any institution. I'm just mentioning broadly, the institutions. So we are really sort of, thankful to all who worked with us, including Clifford. If you look at, if you start my, so if you look at the, how the process works, which I may have covered when we did our Ijara documentation. The whole process, naturally, when it starts, you can move that. So whole process start in terms of the consultative phase. Before that, of course, we do discuss in our board, and we do sort of see where this will add, the standard will add value to the industry, as been pointed out in the keynote speech especially, and how sort of it will help the progression of the industry, how make it more robust, and how make it more transparent, and how to make it more liquid. So these standards naturally play that role. And we did 2 consultations. Of course, the consultation have taken place a while ago. One was Al Barka Banking Group, and one was at the IFC hosted. And these are, this standard what we have issued so far, 2 of them, alhamdulillah, today, the Sukuk Al Mudarabah, and before that, Ijlal. This is culmination of our consultative process. And there were some queries earlier that why didn't we do standard on combination sukuk, for example, or other which are now more in need, or maybe they are now mostly issued. The answer is simple, because when we go through a consultative process, naturally we have a plan and to what to publish and what to develop. So we went with this plan for these 2 standards, and in last slide of mine, I will mention our plan, inshallah, which we would like to do in terms of sukuk documentation standard. So this is very brief background. When we do a consultation, sometime after consultation, it could be standard could be issued quickly. Sometime, in case of sukuk, there were more complexities to do these documents. Actually, it took us a little while. If you go to the next slide. And this is briefly, if you look at it in terms of our board approval. Of course, before even consultative phase, we have a lot of discussion within our board or our executive committee as well, before we really come out. So we try to cover all the angles which need to be covered when you're issuing a sukuk. And of course, the budget is for these kind of organization is one of the main issues, because we don't have capital. We are basically non-profit nature, and all our work is actually for the industry development. So we are grateful for Bahrain Work Fund, which was the main provider for grant for which enabled us to do this standard sukuk, and also National Bank of Kuwait, which did provide financial support towards the completion of these documents. So these are 2, very, we are grateful to these 2 institutions who really helped us to, mashallah, now today produce this. Also thanks, like I mentioned, to working groups, which they give us their input. Of course, the document initial draft, sometime IIFM, based on what is available in the industry, started the starting process. In this case, we're thankful to Clifford, which shared their documents, which was sort of a building block, and then we came out with the actual documentation. If you look at it, sukuk, and if I just want to, when it comes to the point of use of documents and what is the initial starting point, we sort of, in some cases in Islamic, these kind of documentation, there are some available already. So you have to basically look at that, and I'll mention what are the benefits in terms of putting a standard on those. And in some cases, when there are, like for example, when we do our hedging, which is alhamdulillah has become now global, with the use of domestic use in Malaysia also. We have seen, those documents naturally we develop from the scratch. So there is, in some cases, a lot of work to be done. We don't really simply take a document and make some minor amendments. These are major changes, especially if there is something of nature of, risk mitigation documentation. So working groups are critical in our work. We do have an external legal counsel for this work, which is always required. And we have a number of law firms which work with us, and we are thankful to all law firms, and especially to Clifford who worked with us tirelessly for quite a year or 2 on this project. Once the working group, of course, implementation is done, then we move to our Sharia also, guidance process and Sharia approval, which we have in this case. Objective of these sukuk templates is basically to provide easy access to institutions, looking at addressing, some, clauses for clarity purposes. Some clauses are repetitive in one document, and various, let's say, Sukuk issuers will be using this and that, and some clauses are very, nature of repetitiveness, so you better to standardize those clauses. And also looking at from the transparency purposes, or some cases we have to, and I will just share one or two examples where we need to sort of work with our Sharia to basically come out with more sort of, Sharia reasoning and, the approval and also clarity from Sharia perspective also. And that's something which we do. Sukuk, like I mentioned earlier, in documentation, when we were doing this exercise, and we sort of were often, referred that it's a complex exercise and probably it will be very difficult to come out. But Alhamdulillah, we are able to do this. Naturally, when you do Sukuk, certain clauses, you cannot standardize, especially I think when it comes to, let's say Ijara Sukuk, for example, if I give, or other, where the assets types are involved, what type of asset. Naturally, those clauses are, peculiar to what, asset is taken into account. So some clauses are not standardized, but generally, when we started this project, our aim was to at least come to around 80%, standardization. And I think, to be fair, this document will have more than that, maybe closer to 90 or more. So there will be generally clauses which are now put into standardized manner. Of course, the main benefits which we often see in the documentation, if you look at it, which industry was struggling before we started, I think was the body, and our chairman mentioned that we cover different bodies or trade association, as they're called in conventional market. We cover several of them in terms of coming out what they do in one trade organization. IIFM try to cover at least 4 or 5 segments which are covered with the separate entities and conventional. And this point to be be highlighted, I think one has to see, and that is also enforces us towards looking at the support you need. So coming back to subject is of course increasing the efficiency. You don't have to document start from the document from the scratch, and then once you are using it, then there are minor sort of, or in some cases, amendments or an addition. So they are not really a whole lot one has to do. So this will increase, inshallah, the development of Sukuk market further. And then if cost reduction, especially now, before that financial crisis, we have seen, now at least 2 cycles. When we started Sukuk, it was finally after financial crisis, we started looking at this project. As I mentioned, and at that time we looked at the Sukuk default and restructurings and how it will work. So we have seen, those cases, alhamdulillah, where now COVID-19 poses different challenges. But Sukuk market, of course, driven by sovereign now, is continue to, expand. So cost factor is one of the main, also one of the main factor which IIFM take care of. You look at, now if you issue Sukuk, conventional, bond issuances are very easy. In conventional bonds, as we all know, are driven by the balance sheet. While in Sukuk case, they are driven by, underlying assets in many cases, or at least there are some requirements are there. Some, could be, in terms of asset, they can be called, asset light, but there is always a link of, some kind of pool is there for assets. So that makes, in terms of issuing Sukuks at time, documentation are much more in some cases than the conventional bond. So conventional bond can be issued very quickly. So this also helps to shorten that time as well. Of course, transparency, in my view, and generally, I think one of the key factors when you have standards is creation of certainty and transparency on critical issues. Sometimes, it may not be, the documentation may not reflect that kind of transparency, which is generally need to be there when you are sort of entering into, especially for the investors. also, and looking at information of on the type of issue, what is issue, and also Professor to provide investor the confidence, the comfort which I mentioned, and Sharia harmonization is also a factor for the key benefits, of course, there, and also legal certainty in many cases is also part of this documentation standardization. We have for this case three main sort of or the users first of tier 1 sukuk. So it is now sort of covering more on the financial institutions. So issuers would be financial institutions and other financial services related entities. We did look at also for the corporate also perpetual, as we know some corporate have in the past and now also issuing perpetual sukuks as well based on Mudarabah, and that is something which I will mention in the end, our plan inshallah for that. But this document at the moment is covering tier 1, but then it can be sort of tailor-made for corporate with some changes which is our aim. Of course, it can be helpful to lead arrangers and legal advisor and other parties. The three main sort of documents in this case are Prospectus for Perpetual Mudarabah. So that's the key document which is there. Master Mudarabah Agreement is one of the key documents, and of course the Declaration of Trust. So to issue sukuk, these are the three main documents for Perpetual Tier 1 sukuk which need to be considered. And alhamdulillah, today we are publishing these. In terms of broadly Sharia guidance, which our Sharia board has on the basis has approved and put those guidelines. These are broader sort of guidelines which are there, which is the sukuk should retain the rules and principle of Sharia as set out in the template Sukuk Al Mudarabah Tier 1 document. So the should retain the rules and all when you're issuing sukuk by the issuer. The proceeds from the sukuk should be used for Sharia compliant purposes. So that's also one of the requirements. Then if you go to the next slide, please. The sukuk must be in accordance with the company's permissible activities. So that's company when issuing the activities have to be Sharia compliant activities. Of course, we all are aware of no interest, which is the case. So that should not be the case in this case. If there is any, generally in the documentation, what we have, if any payment which is comes from that, or any amount or fee comes from that, then that naturally is goes for charity in some cases. But in this case, generally broadly, there should not be any interest or something which is interest or alternative name is given. So that is not something which our Sharia has approved. Sharia also, another thing we see when sukuks are issued, after issuance, if the compliance level falls short, that is also ongoing sort of thing. So what is recommended here is, or by Sharia, is that there should be a Sharia supervision committee. So that should supervise and try to and see that the assets and that the sukuk maintains its structure and maintains what the basic parameters on which basis it is issued during the entire duration of the sukuk. So this is something which is also very critical, which we have seen, in some cases the Sharia supervision was not there, and then we saw if there is some changes in the Sharia, those are also sometimes, there could be legal issues in that. So that is also a recommended thing. Governing law is something which, when we do these documents, naturally that's a huge task. It's nowhere in the documentation, whether conventional and Islamic, you can standardize the governing law. When we sort of look at it, the law, when we start, of course, generally the basis is the English law or common law. And then, of course, there are civil laws also, issues which sometimes arises in some jurisdictions. And that's a separate subject, which today time will not allow me to go into those details. But our starting point always being English law. Having said that, these documents can be, governing law is subject to, the issuing jurisdictions and their law. So that can be changed, like we have seen. If people are attending from Malaysia, they will know when the TMA a few months ago was implemented in local market. So they did a governing law change, and the clauses which are related to governing law were naturally amended to suit the local law or the jurisdictional law. So this flexibility is always there in IIFM documentation, and in this case, this flexibility is also is available for that. So that is something which naturally nobody can standardize. So that is up to the parties when they are doing. They have to select which governing law, or if they're taking English law, they can take it as it is. Yes. One of the main issue in terms of Mudarabah, when you look at it, is ranking and subordination. Of course, I have to also mention that now all sukuks, whether tier 1 or even if you do a Mudarabah for corporate, there will not be any purchase undertaking. So this issue is now done and buried. It is all Mudarabah sukuks are basically there is no purchase undertaking. So this standard, of course, there is no purchase undertaking. When inshallah we'll do the Mudarabah for corporate, there will not be any purchase undertaking. But then you enhance, certain features so that it will not be that easy that somebody can just, manipulate things or, investor can suffer. And this is something which we sort of look at it. And when you do a ranking for, so it is part of the tier 1 capital. So it's the common stockholders are naturally also, in the same sort of a pool with the Mudarabah pool. So when we have some adverse event happens, then actually one has to, from beforehand, have to see what the seniority will be. And seniority, as per our greater discussion in our Sharia board, depends on the contract itself. So that assessment needs to be made which contract have higher seniority. So it's not really that easy that you will say that, okay, this Mudarabah sukuk will be ranking wise higher than the common capital. It depends what kind of other Mudarabah contracts are there and what seniority or what they have. So that has to be, consideration have to be looked into in terms of ranking related issue. The other issue is also, given the time, is that non-distribution of profit and non-cumulative nature. So these sukuks are of non-cumulative nature, as we know. And the dividend, if there is no dividend or there is company suffer a loss, naturally there will not be any profit payment. And there are various sort of clauses like 5.1 and also 5.7 and others, which basically provide greater detail. And this point will be covered by Brother Ahmad from Clifford. So I will not go into greater detail. I will let him basically go into details in this case. And then if we move to the next slide, please. My final point would be looking at the footnotes. And footnotes provide greater clarity. That's why we put our, in all our standards you'll find we provide footnotes. And these footnotes are generally based on references of AOP standards or International Fiqh Academy standard, the Sharia standards. So their ruling, we look at it, and those footnotes are referring to those ruling and how it will apply. In particular, if you look at it in this case, there are many footnotes in there, especially AOP standard number 13 for Mudarabah. If I try to mention, there were two standards in particular from AOP which are mentioned here, and you will find it in the document itself. That those are sort of referred 13 and 17. So AOP standard 13 revised on Mudarabah and standard 7 on investment sukuk. These two especially are also used as a reference for these footnotes. And if you see the next slide, the footnote would mention Mudarabah in general nature has 18 footnote, general nature Mudarabah is, you cannot really, it's, it's not binding when it's not entered. So it's of a, generally, if you discuss Mudarabah, and that is the difference when we do our documentation, it will be covered from the general to actual practical. So we look at that practical aspect. Generally, Mudarabah is not really binding. But in cases, Mudarabah become binding when the business has commenced. So in this case, this footnotes in particular 18, what it is saying is that Mudarabah is not a binding contract, but in these sort of conditions, when Mudarabah has already commenced, then you cannot just, one party can actually, just run away or liquidate. So then it is of course binding. It has to meet certain criteria. Next slide, please. When contract parties agrees to terminate, duration of contract will remain, in place until the, by mutual consent parties decide to terminate. So this is, key aspects when you sort of looking at the Mudarabah. In this case of Sukuk, particularly, you are looking at that, it has already commenced. So it's not really saying that, when I buy Mudarabah Sukuk, so there is no binding and somebody can just run away, or sure, it's not that simple. Then this rule apply and the conditions apply, which we have to be. So this, one of the aspects which we do in terms of footnotes to provide, what the general sort of a Sharia standard is, and then how it will apply. So it's not, you cannot take just one word, for example, oh, it's not binding, so we should not do, but then you have to look at in the entire sort of picture that it is basically, these are the conditions which are important. So where Mudarabah, you cannot just terminate like that. So mutually, of course, you can do that. Or if they call, as we've seen, generally there is a call option is always there, issuers sometimes, do call, as we have seen in some cases in FI Sukuks. Even, in case of conventional, in case of corporate perpetual, we have seen what I recall at the moment is Dubai Gem School, for example, had a very high yielding Mudarabah perpetual, which I think 2-3 years ago, they decided to call it. So this is something which we also have to be mindful in terms of the footnotes. And my final slide would be, of course, before that, I must, say who has approved. So documents are approved by from Sharia Board and our honorable scholars. We are really grateful for them, for their guidance and all their support. And Dr. Ahmad also worked tirelessly in the Sharia process or in the drafting process when we do working group consultation. So that is also one has to acknowledge. So this is approved by a Sharia board. Next slide, please. So we do have a Sharia pronouncement. And generally the case when you are doing a Sukuk pronouncement can be used if you are not changing those clauses which is affecting the Sharia ruling. Then pronouncement can be used in this case, and it can be obtained by IIFM. We have certain criteria operationally, who to give, and in terms of for the Sharia pronouncement, which are Sharia, Dr. Ahmad, he manages that, but there is a pronouncement, and if they are issued and without affecting the clauses, especially Sharia, of course, governing law, if you're changing, that doesn't really affect the Sharia ruling in that case. So this is something which also we have to keep in mind, that we do have a Sharia board approval for this. So I've already mentioned about the reference from fake academies and institutions, and so this is in the drafted process, we use that. So this is also I've mentioned. So final point which I would like to basically cover is looking at our plan, which again, this is something which we, our discussion and subject to our board approval and other factors which I mentioned in the beginning, which we do. Our aim is, inshallah, look at the senior and secured Mudarabah. That could be perhaps used for combination Sukuk. So there is some work already being done, but that's something to be completed. That is our aim to do that, if subject to market requirements. Sukuk Al Ijara asset backed. That's another area which we like to do, and I've mentioned or we have mentioned when we do the Ijara documentation in October last year, that Ijara Sukuk are basically almost all of them, barring few, are asset based. But having said that, there are some conditions also. Pure asset backed, are different sort of instrument which we fully support. That documentation need to be developed, and once we have some Sharia ruling, which I understand maybe AOFI must be working on it, we can sort of look into that documentation. We do sort of, I like to mention clearly that we do coordinate our activities, especially with IOFI and IFSB. So we complement each other's role. We play a greater role in terms of development on the industry. So in particular, these two entities, we do have a very good working relationship, and we try our best that we contribute, and we try to not overlap. Of course, we don't do that, but to really positively contribute, and each has a very great role to play in the development of the industry. So this is something which we have to keep in mind. And like I said, hybrid documentation is being recommended for us. We have this combination sukuk, which is like hybrid. You can have now even sukuk based on Mudarabah. You have others, wakala, sukuk may have one or two other contracts. So these kind of things, something which previously also I mentioned in the beginning, were asked, why didn't we do this, documentation for hybrid, or why didn't we do for combination? The answer is that we have a work with a plan. Once we start that, once the recommendation is done, when we progress, it's not, as simple that we change. But of course, whatever standard we have produced, alhamdulillah, it contributed to the industry, and we sort of are thankful to all the users who are doing it, all the people who are trying to contribute, and we want others to work with us, in this process, which is not really can be driven by only IIFM. We require, of course, the regulators. We require the other, institutions and other market players to work with us. So it's not as simple that one entity, we expect that can produce and do miracles. We have to work collectively, and we have to support these initiatives. So this is very broadly, I mentioned 3 standard on sukuk. Of course, at the moment, these are something which is subject to our further discussion. So I'm not really saying that it will be tomorrow or day after tomorrow, but we hope that it can be done in a reasonable time and as per our process, and with the support of our board and their approval and all others. With that note, I would like to now end my presentation. I hope I've provided you some of the key sort of aspects, how we do the standard, some of the things which broadly cover in the document. So these are, and another thing which we are now starting, alhamdulillah, with the Sharia is a plan for issuing training on our standards. So this is part of our exercise, where we will be going in more greater details. So that is something which is in process in terms of the training program itself and its launch, but that's, alhamdulillah, some board approval was there, and some agreement, as you mostly will know, is already in place to work on that. And we hope that something in near future will start, training, which we receive a lot of requirement from institutions to do training, practical training on our standards. So we are not really training institution. We are simply going to provide on our practical training on a student for basically individuals who are working in the industry or financial institutions and related entities or corporate. With that note, thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuhu. And I hope it will, next session, I'll be around if there are questions, or after Dr. Ahmad or after Ahmed Choudhry, Clifford chance, I think what we will do is that we'll have a Q&A for this session broadly, but I will be there in the panel also, just to see if there is any question which I may be able to answer. But the panel itself, inshallah, will add great value. So with that note, thank you very much once again.
Thank you, Mr. Ijlal. Thank you very much for this comprehensive and thorough explanation. We thank you for that, as usual. Now we will have our brother, respected brother Ahmed from Clifford Chance, to present on the key legal aspect of these documents. So over to you, brother Ahmed. Thank you.
Thank you, Sheikh. Thank you. Assalamu alaikum. Bismillahir Rahmanir Rahim. Thank you for my esteemed speakers before me. It's a very, very important project that we are launching today. It's my privilege to speak on a few of the legal aspects that we are key features in the legal documentation. If I can just ask the IIFM team to launch the slides, please. A lot of the points have already been touched upon by the esteemed panelists before me. Sheikh Ahmed talked about some of the key features, the governing law, the subordination, and the non-distribution of profits. I'll come on to talk about those in a bit more detail. A very interesting point was made from our Honourable Chairman in relation to the risk sharing and Mudarabah and the use of Mudarabah. As we know, this is only a small percentage of the overall Sukuk market. And it is our intention, inshallah, with the launch of this project, that the Mudarabah Sukuk will be used more widely. And it is incumbent on all of us in the Sharia compliant industry to go towards more risk sharing products. And very important observations from Dr. Adnan as well in relation to the robustness and the Sharia compliance and the bridging of the gap between documentation and industry participants and regulators and standards of IOFI. So it's very, very important that we bridge these gaps with the standard products that we're raising. And Brother Ijlal mentioned some of the key features. He touched upon a number of the points that I'll be discussing in my presentation. So without further ado, I'll go straight into the key considerations that we had when we were launching these products and in the preparation thereof. So just going through the slides, the key consideration initially, as Brother Ijlal mentioned, was to create an English law benchmark suite of Islamic finance products for Sukuk Al Mudarabah in the Tier 1 space. So we had the same key objective in the launch of the previous Sukuk Al Ijara product. And we know that the English law is the benchmark for capital market Sukuk issuances. Now, that's not to say it can't be used in other jurisdictions, but of course, local counsel would need to adapt the templates for use in each specific jurisdiction. And what I'll come on to talk about specifically in the Tier 1 space is that we would need to look at the regulatory capital regime in each specific jurisdiction. We also use the concept, or the English law concept, of the trust to create legal and beneficial ownership in the Mudarabah assets and the trust assets. And that's the reason why in this suite of products, we have the declaration of trust as well. So these are the legal construct, the trust certificates that will be issued to certificate holders and investors. My panelists before me have talked about the ease of issuance and the efficiency relates to the use of these products and the intention behind them. So I won't talk to that anymore. And also Brother Ijlal set out the guidelines as to Sharia compliance that the IIFM Sharia board outlined. I had the privilege to sit a number of times with the IIFM Sharia board to create these documentation to make sure they work from a Sharia compliance perspective and also within the confines and within the concepts of English law. Brother Ijlal also mentioned that the footnotes in the documentation help and assist the reader and the users of the templates in relation to the use of those products, and also explain some of the Sharia concepts stemming from IOFI and other fiqh academies in relation to where certain issues have come out in the documentation. I'll touch on the Sharia representation that we now include within the documentation. And also, as Brother Ijlal mentioned, we now have a standard waiver of interest clause that we have in our documentation. So moving on to the next slide, please. So some of the specific considerations that have been touched upon already in the webinar, and I'll go into talking about them in a bit more detail. First of all is the capital regulations. Now we are issuing Tier 1 Mudarabah standard documentation. So far as possible, we have standardized the provisions from a Sharia compliance perspective, from an English law perspective, and to give its widest application, the users of these documents will have to, on a transaction-specific basis, apply these documents within the regulatory capital regime of the jurisdiction of the relevant financial institution or issuer. For our documentation, we have a commingling general business mudarabah. So that means that the mudarabah capital or the investment from certificate holders will be applied into the general mudarabah business of the relevant issuer. One of the key features of this mudarabah tier 1 instrument is that it's a perpetual instrument and therefore does not have a specific liquidation or end date. And I'll come on to talk about that in a bit more detail. As Sheikh Ahmed mentioned, one of the key features and necessary features of a tier 1 instrument is that it is subordinated behind senior obligations and only ranks ahead of the ordinary shares of the issuer. The payment of profit is a very important and key feature of this instrument and tier 1 capital as well. There are what we'd call non-payment events, and there will be certain times where profit cannot be paid under the mudarabah, from the mudarab to the Rabb al-Mal, and as a consequence, there cannot be the payment from the trustee to the certificate holders, and this is largely governed by the regulator. There is also no obligation on the part of the issuer to actually pay the profit, and therefore at any time profit can be elected not to be paid by the mudarab, again for the benefit of the Rabb al-Mal. However, there are consequences of a non-payment event occurring, or the issuer or the mudarab electing not to pay profit, and that becomes a dividend stopper or a restriction on the mudarab not to be able to issue dividends or returns to investors. One of the key features is that there will be a write-down at the point of non-viability. Now, that is a regulatory-driven concept that is a key feature of tier 1 instruments and is an essential part of the documentation. And we have specific clauses that deal with the write-down at the point of non-viability. It's important to note that within certain jurisdictions, and this would need to be considered on a jurisdiction-specific basis, it is possible that those, it could be possible to have conversion rights, i.e. rights of conversion to equity. However, this would have to be considered on a transaction-specific basis. Liquidation events are very, very limited in tier 1 mudarabah transactions, and I'll come on to talk about that a bit more. And one key feature from a Sharia perspective, and this is highlighted both in the risk factors in the template prospectus and also in the mudarabah agreement itself, is that there is no guarantee of return. And this goes back to the Honorable Chairman's comments about risk-sharing transactions such as musharaka and mudarabah. Moving on to the next slide, please. So I think we've discussed most of this in sort of the project and our involvement as Clifford Chance and the process that was involved and the sort of the robustness of the process in creating these documentation. So as you know, we have working groups consisting of financial, legal and Sharia institutions that review the process and the documentation. We take their comments on board and then we go through a thorough review and revision of the transaction documents process. So this process has taken place over a number of months and has culminated in the launch today. So as well as preparing of the documentation, there is then a thorough Sharia guidance review as well. So we sat with the Sharia Working Party Committee, a smaller working committee from the IIFM Sharia Board some months ago. And there was a thorough debate and discussion on each of the key features of these documentation. That culminated in further revisions and discussions on some of the key aspects. And then finally, once the working committee recommendations were put in place, that led to the documentation being put before the IIFM Sharia Board and ultimately leading to the approval of these documents and gives us the great honor of launching these documentation today. So just moving on to the next slide, I will talk to what are the documentation that we have for the suite of documentation. And those that were here for the launch of the IIFM Sukuk Al Mudarabah documentation will also know the similarities between the two products. So just moving on to the next slide, please. We have the template prospectus. We have the Master Mudarabah agreement itself, and we have the declaration of trust. Before I go into each of those, it's just a point to note that we have not standardized some of the more capital market documentation, so the subscription agreement and the agency agreement, and they're not a key feature of this standardization project, so they will need to be considered on a transaction-specific basis. But the key objective is to ensure from an English law and a Sharia compliance perspective, the key features of the Islamic structuring are within each of these documents. So go into the template prospectus, please, on the next slide. The key features that you'll see in the template prospectus are the main subheadings there. So first we have the structure diagram and principal cash flow section. So this summarizes over a few pages how the cash flows will work on the Sukuk Al Mudarabah and how the Mudarabah capital will be invested from the trustee on behalf of the certificate holders, will be invested in its capacity as Rabb al-Mal in the general business Mudarabah pool of the Mudarab, and that will constitute the Mudarabah capital, the investment. And then once that investment is made in the general Mudarabah pool, it will constitute a pro rata undivided interest in the general Mudarabah pool, which will be the Mudarabah assets. So that's a key feature that is in the template prospectus. Two other key areas that are included in the prospectus are the summary of the principal transaction documents. So we have summarized the key legal and Sharia compliant features of those documentation, and therefore there is a summary of principal transaction section. And then the key area that we were also able to standardize is actually the risk factors relating to the certificates. So as mentioned before, some of the key features that are applicable to the tier 1 instrument would need to be flagged to investors and include some risk factors. So for example, if there is to be a non-payment of profit, or there is an election for non-payment and the consequential dividend stopper that would apply, that would need to be disclosed to investors. So we have also included typical risk factors that would be applicable to a tier 1 Mudarabah issuance. Just going on to the next slide, I've just put the structure diagram, and this is just replicated from the actual template prospectus. So this will be a key feature of the document itself, but we can see how the certificate holders at number 1 will provide its issuance proceeds to the trustee, and in its capacity as Rabb al-Mal. At number 2 will provide the Mudarabah capital to the issuer or the company as Mudarib, and in return there will be a Rabb al-Mal profit or liquidation proceeds at the termination. And in turn, the trustee or the Rabb al-Mal will be able to pay the periodic distribution amount under the terms and conditions to certificate holders. So just to mention also, there are a template form of terms and conditions in the template offering circular as well. So just moving on to the next slide, there's a little bit more detail of points I have already discussed. So there will be an investment plan that is appended to the form of Mudarabah agreement, and that will need to be concluded and finalized on a transaction-specific basis. And then the Mudarabah agreement will also include details as to the non-payment events and also the non-payment election, which I talked to earlier. And as I mentioned, the payment of the Mudarabah made in circumstances where a non-payment event has occurred. And obviously, there is confirmation as well in the Mudarabah agreement and also in the terms and condition and the offering circular that if there is a non-payment event or there is a non-payment election, that there is no obligation to make up those profit payments in subsequent periods, i.e. the instrument is a non-cumulative or non-accruing instrument. And because of one of the inherent features of that is one inherent feature that is also listed as a specific risk factor in the documentation. So moving on to the next slide. I just listed a few of the other points that I highlighted above. So there is an express entitlement and provision in the Mudarabah agreement, which entitles the commingling of the Mudarabah capital with the general Mudarabah pool of the issuer. I discussed earlier that this is a perpetual instrument with no fixed end date. However, there is an option to liquidate on the part of the company or the issuer in its capacity as Mudarab under the Mudarabah agreement. And that final liquidation can be exercised on the first call date. That is a commercial date, usually 5+ years time in the future. Or on after the issue date, if there is a tax event, i.e. there's an event where additional amounts are paid under the instrument, or a capital event as well. In addition, there are rights within the documentation where if the instrument would no longer be considered qualifying tier 1 instruments within the regulatory framework of the specific jurisdiction, that there could be revisions made or variations made to allow for the sukuk to continue, but with variations to allow for the instrument to remain as qualifying tier 1 capital. One of the key points that I mentioned earlier, and has been mentioned by previous speakers, is also in relation to the subordination. So there is clear subordination provisions listed within the Mudarabah agreement, and that's a key feature of the tier 1 instrument. And there is also clear mention of the subordination and the ranking of the instrument vis-a-vis issuers' other obligations, and this is also set out in the terms and conditions that are within the offering circular. Just moving on to the declaration of trust on the next slide. Just very briefly, as I mentioned, given that this is the legal mechanism by which certificates are issued, we have created the template declaration of trust, and the actual global certificate and the form of certificates issued will be appended to the declaration of trust and will be issued on a transaction-specific basis. And then one key feature that's just a flag again, and I say again, this was a key feature of the Sukuk Al Mudarabah documentation, is consideration whether the SPV is to be an orphan SPV, i.e. held on charitable trust, or whether for public policy or legislative or tax reasons, it needs to be held by the relevant issuer, and that's generally more applicable for sovereigns. The next two slides you'll have seen from me before relates to the Sharia representation. Just moving on to the next slide, please. The Sharia standard representation has now been settled within the market and is a feature of all Islamic finance transaction across a number of products. But in the capital market space, this is the typical Sharia representation that we have. And it's a confirmation from the company and the trustee that it will not claim that its obligations are outside of its powers or not compliant with the principles of Sharia. It will not take any steps to challenge the Sharia compliant nature of the documents, and to the extent none of its obligations will be invalidated to the extent possible within law by virtue of any judgment of any court that the agreement is not compliant with the principles of Sharia. So as I mentioned at the outset, and as per the next slide, the governing law and enforcement is an important aspect of the documentation, and we're using English law as the choice of governing law, and obviously the enforcement and the jurisdiction clause will be considered whether to be, for the matter to be reviewed before the English courts. And also there is the possibility to add on a transaction-specific basis consideration whether in the relevant jurisdiction an arbitration clause may be preferable. And then the last slide is just to mention the waiver of interest clause. I've just set this out in full, but this is a feature in both the conditions in the template prospectus, but also in the Mudarabah agreement as well, that the parties waive any entitlement to interest should it be paid in connection with a judgment in relation to interest. So that is a quick run through of the key features and concludes my presentation. I'm happy to take any questions and also now or separately as well. And I'll hand back to Sheikh Ahmed.
Thank you, Brother Ahmed, for this presentation. So now we have few questions. So I reckon for this session, of course, I will be around, later on also. But I understand Brother Ahmed may, have some other commitment also. So there are 3 questions which I have picked up. About 5 of them you can see, but I think 3 probably at the moment would be okay for us to do it, because some of the questions are basically, if you see the entire document, so the nature is such that it cannot be as simple to answer. But one question is on the legal opinion, which of course IIFM does legal opinion jointly for hedging in certain jurisdictions, but it's a huge task. And the opinions are only for members. So this is something which generally one should be mindful. As far as Sukuk legal opinions, like I said, it's a huge task. If a certain jurisdiction they require and all, that is a separate exercise. And we don't plan to do that for Sukuk at the moment. That is subject to, each issuers, they do it. And that's how it works for Sukuk. Then there is a question which Brother Ahmed can probably pick up, the 2 of them. One is asset-based and asset-backed. So they're raising an issue of asset-backed for Mudarabah. So they are general pool, so there is no underlying asset like we have in Ijara. So maybe you can explain further, but it doesn't really, this sort of terminology, in my view, doesn't fit here. But maybe you can further expand. And then other question, which is non-payment solution and dividend stopper by Sure. So how it is Sharia compliant? Of course, you mentioned about the risk factors. That's how you explain in the document. So when somebody investor taking a note, naturally he sees this risk factor. So it cannot be the company is making loss. How will it pay? But these 2 questions, maybe Brother Ahmed, you can explain.
Sure. Thank you. And thank you for the questions. The first one, I think that's right. And asset-backed and asset-based transaction structures are more relevant when you're looking at, say, for example, the Ijara Sukuk template that we prepared. Now, in the asset-based structure, there is no recourse to the asset, and there is a purchase undertaking which crystallizes the obligations for the maker payment from the relevant issue. So there's no recourse to the underlying asset. And that was the feature of the Sukuk Al Ijara transaction that we launched in October last year. And then the asset-backed transaction is something that is a separate discussion, and Brother Ijlal mentioned that's possibly the subject to board approvals, etc., is going to be a feature of forthcoming standards, and that will look at the actual asset itself and recourse to the assets. However, from a standardization perspective, that depends on the nature of the relevant asset that is being discussed. And also when we look for, what will be the most useful documentation for the market, at the moment, the vast majority of transactions, particularly the Ijara transaction, are based on asset-based transactions. So having a product that works for the vast majority of transactions as they stand today is obviously a very, very important feature of the overall objective of the IIFM. And then in the context of the second question, so the non-payment election and the dividend stopper, I mean, it's one of the key features of a tier 1 instrument that those features are inherent in the transaction. So the non-payment election and the non-payment event, i.e. if there are insufficient returns from the Mudarabah to create enough money to make the return and the payment of the profit. Both of those are inherent within the tier 1 instrument framework, and we see this across all the transactions. However, the non-payment election, should the Mudarab choose not to make a profit payment, and that's within their discretion, then obviously the commercial incentive for them that they need to consider before they decide not to pay certificate holders, for whatever reason they choose, is that they can also not pay dividends to their shareholders. And therefore, the commercial incentive is for that non-payment election, or sorry, there is a commercial incentive to consider should the non-payment election be elected on a transaction-specific basis. And then in respect of how those features are Sharia compliant, I mean, these are obligations and discretions within the framework of the documentation and in the tier 1 capital framework. And obviously these have been discussed and considered at length by the IIFM, both the working committee and then the full board as well. And it's on this basis that those features are within the documentation.
Well, thank you very much. I think one last question is, jurisdiction, where conversion is not allowed, and regulatory framework with Basel and also Sharia opinions. So this is, I think, the case. Maybe you can further elaborate, but it is more case, like we said earlier, is between jurisdiction to jurisdiction basis. So that kind of a thing one has to see. But maybe it will be good if you can provide comment on this last question.
Sure. Thank you. So that's absolutely right. I think some jurisdictions do have both write down at the point of non-viability, and there are also conversion into equity rights as well. Most of the jurisdictions here in the GCC region will generally, from the regulatory framework, only have write down. And there are added complications when you are looking on whether there can be conversion rights, because you need to consider what the conversion ratio would be, for example, and actually the legal mechanism of converting this instrument into a layer of equity. And each jurisdiction will have its own equity structures, so whether you can have preference shares or ordinary shares or different types of shares. So we did discuss this, and it was discussed at length in one of our Sharia board meetings. And the documentation that we have presented today and will be launched have write down at the point of non-viability embedded within them. There is a note in the documentation for people to consider and users to consider on a transaction-specific basis on whether it would be possible initially, and then whether it would be required from a commercial perspective that there would be conversion rights within the documentation. But because of the jurisdictional specific nature of those conversion rights, that would need to be considered on a transaction-specific basis.
So thank you very much. I think this is, in particular, this last question, non-viability is also correct to say, is something which probably is not really can be standardizable, right? So it is more for the jurisdiction who is issuing. So is that correct, right, Brother Ahmed?
That's correct, and that's why we dealt with this as a reminder to the user by way of footnote to consider conversion rights on a transaction-specific basis.
Yes. So there is a footnote. I think since it's not a few pages, it's a complete set of documentation with number of pages. I don't recall, maybe 50, 60, whatever. It's so one has to really read, and go through all of it, and then you will understand, and the footnote, inshallah, does provide a lot of clarity. And then, inshallah, we are here to basically, from IIFM, something which probably can be also, if needed. Having said that, what has been approved? So we are not going to, entertain some other, when you do a standard and publish, so naturally it is looked into all angles by the working group, by the legal counsel, and also by our Sharia board. So naturally, any other amendment will not be something subject to discussion. But for clarity, we often receive, some queries in IIFM. It's always the case. All our published standards, and we are, inshallah, happy to be there to provide that clarity. And with that note, I think we can sort of finish these two presentations. Dr. Ahmed, shall we or I think what I can suggest is now we just simply move to the next session. So if Brother Ismail, no, okay, I'm doing it, no problem. So it's a great time. So what we are doing now is rather than the stretch race, we just move to the last session, and I suggest Brother Ismail to take over now. Of course, I will be there in the last minute if there is anything to be added. But esteemed panelists is mashallah very experienced and very diversified, so I don't think so I'll be needed. But with that note, thank you very much once again for this listening to session. And over to you, Brother Ismail, and all the panelists, inshallah.
Thank you, Brother Ijlal. Respected IIFM Chairman, IIFM board members, ladies and gentlemen, Assalamu alaikum, very good afternoon, very good evening, and possibly good morning to you all. I'm very pleased to meet you all virtually today, and hope that not in a distant future, we will be having a ground seminar on the ground, consultation meetings and standard launches. Virtually, we're doing this due to COVID, but we are missing the element of on-the-ground seminars. And I hope in the future we will be able to do that once the pandemic eases. Anyway, let's move on. Ladies and gentlemen, I would like to take this opportunity to congratulate IIFM management, the working group, IIFM Sharia board, in developing and launching this important standard on Sukuk Al Mudarabah Tier 1. Undoubtedly, Clifford Chance also played an important role with his numerous drafting. And then what you see today is the final version of a very long and hard-working time that we had in producing this. Ladies and gentlemen, Islamic banks, in keeping with central bank's requirement and focus on its depositors, quickly embraced Basel III ratios on capital adequacy. This was to strengthen its balance sheet from the effect of the financial crisis, so make it stronger. Alhamdulillah, majority of the banks in the GCC currently maintains a very high capital adequacy ratio, far above the benchmark required. Undoubtedly, this has provided strong confidence to the investors and allowed the banking sector to issue such perpetual sukuks. I hope today's launch of the IIFM Sukuk Al Mudarabah Tier 3 documents will allow more institutions to use this document for a faster and transparent processes and allowing new issuers to tap this market. Excuse me, because my mouth is getting dry, so my tongue gets stuck. Ladies and gentlemen, allow me to highlight the format of this session today. I will request my esteemed panelists to briefly introduce themselves. Then I will start with a short presentation on global sukuk and financial institution sukuk, with some emphasis on perpetual tier sukuks. After my short presentation, we will begin our panel discussions with a highly respected panelist who will provide insight from an issuer perspective, lead manager's perspective, legal perspective, and very importantly, from the rating agency's perspective. After the panel discussions, we'll open the floor to you, the audience, for Q&A. The audience will pose any questions relating to today's discussions. And you're welcome to post them as we go along, but we will take the questions after the panel discussions. Now, I'd like to introduce our esteemed and highly respected panelists. Dr. Omar Hosseini, Chief Executive Officer, International Islamic Management Corporations, normally referred to as IILM. Doctor, if you can just briefly, couple of minutes, give us a brief about yourself.
Thank you very much, Ismail, and I'd like to thank you very much for inviting us to be part of today's event. As you've said, I'm Omar Hosseini. I don't think I should tell you more. I'm the CEO of the International Islamic Liquidity Management Corporation, the IILM. IIFM is a multilateral financial organization headquartered here in Kuala Lumpur. And as you all know, we issue short-term sukuk on a monthly basis. We have a $4 billion program. And at the moment, we do have $0.51 billion sukuk outstanding. And just a little about myself, I was previously the executive director in charge of legal and compliance at the ILLM itself. And at some point, I was also the acting CEO of the same institution. Thank you.
Thank you, Doctor. Mr. Kashif Raza, Head of Corporate Finance and Investment Banking at Abu Dhabi Islamic Bank. Maybe if you can give your 2 minutes about your activity at ADIB and as well as yourself.
Thank you. Thank you, Brother Ismail. Assalamu alaikum, everybody who's on the call. It is a great pleasure for Abu Dhabi Islamic Bank to be a part of this discussion, and I'm grateful to the team and Brother Ismail personally for extending this invitation. I'm also very happy with the sort of content that I've seen so far, with more particularly the last presentation by Clifford, where the documentation and the underlying objectives were clearly highlighted. Just to introduce myself, my name is Kashif. I am the Head of Corporate Finance and Investment Banking for Abu Dhabi Islamic Bank. I've been with the bank for now more than 10 years and have been in the region in UAE for 15. Before this, I was with Dubai Islamic Bank in a similar capacity. And my areas of coverage involves DCM, syndications, structured finance, asset management, and ECM and project finance. So that's in a nutshell about me. Over to you, Brother Asma.
Thank you very much, brother, for a very, very quick, comprehensive introduction. Next, let me introduce Brother Sabir Ahmed, Executive Director, Islamic Origination, Standard Chartered Sadiq. I'm sure many of you who have been involved in the Sukuk issuance or Sukuk investments would have come across Standard Chartered Sadiq on a regular basis. So, Brother Sabir, 2 minutes of your time.
Assalamu alaikum, Brother Ismail. First of all, many thanks, Brother Ismail and the ILM management team for giving Standard Chartered the opportunity to participate in this launch of Mudarabah standards. Briefly about me, I'm part of the Islamic banking team, Sadiq, Standard Chartered Sadiq. Specifically, the role that I do in the bank is basically to be involved and to lead the structuring of all structured finance, Islamic structured finance transactions of the bank in different locations, so in different jurisdictions such as Asia, Middle East, and Europe as well, Turkey and UK. So that was about me and about the bank as well, as you rightly pointed out, and many thanks for that. Allah has been very kind, and we are ranked #1 in the International Sukuk League tables at the moment. And we have a lot of experience of advising both senior and secured sukuk as well as additional tier 1 sukuks for many of our clients. So thank you very much for this, Mike. Over to you.
Thank you very much, Sabir. Finally, my panelist, Dr. Muhammad Damag, Senior Director, Global Head of Islamic Finance, Middle East and Africa, S&P Global Rating. Very, very important element here. He rates most of the sukuks, and we take some guidance from them. So, Brother Muhammad, if you can just give us a couple more minutes of your time on this. We will discuss about the rating agencies later on, but just give us a brief of yourself. Thank you.
Thank you very much. And also, I'd like to thank the IIFM for inviting us to be represented on this important event. My name is Mohammed Damag. I'm the Global Head of Islamic Finance for S&P Global Ratings. I've been with S&P Global Ratings for more than 10 years now. I'm also the sector lead for financial institutions in the Middle East and Africa. Back to you.
Thank you very much. That was a very quick overview. Thank you. Okay, as I promised, what we will do now is I will do a short presentation on the Sukuk issuance in general, and then after that we will go into the panel discussions. So if I can request, thank you very much indeed. So ladies and gentlemen, what I'd like to present is some interesting bar charts that highlights the growth of capital market Tier 1 and Tier 2 sukuks by financial institutions as a volume comparison to the overall sukuk issuances since 2012. With the introduction of Basel III, we can see how the financial institutions took advantage of the Mudarabah Basel III compliance structure in order to strengthen their balance sheet after the financial crisis. Now, you will see from the bar charts here, this is a bar chart of global sukuk issuances of tenor greater than 1 year. So it encompasses all global sukuks, irrespective of domestic or international. So of all the sukuk issued globally, financial issuance sukuks amounted to about 51 billion from 2012 to 2019. This includes both domestic and cross-border sukuk that had a maturity of greater than 1 year. The first Basel III compliant sukuk was launched in 2012 by IDB and quickly followed by a number of Tier 1 sukuk issuance by DIB and others. I think this important element I will basically highlight later on as to how that developed. But let me just go back to the financial institution share of the global sukuk issuance, which translates to, if you look at the bar charts, on average between 2012 and 2019, the financial sukuk translate to 8.75%, so roughly 9% of all sukuk issuances greater than 1 year issued by financial institutions. As one can see, 2014 and 2015, we saw sukuk issuance dropped as a result of the financial crisis fallback. However, the financial institutions' share of the overall sukuk issuance increased as banks pushed to strengthen the balance sheet to using Tier 1 and Tier 2 sukuks. Mudarabah has become a very important tool for the banks in terms of capital adequacy ratios. And you can see from this graph itself, at 2014 and 2015, you see the green ones, which are the FIs only, gone from 9% to 15% and maintain that almost 9% level. So that's the volume of FIs using the sukuk market. Next slide, please. Now to look at the same chart, but from a domestic purposes. So this chart this chart looks specifically to international cross-border sukuks. Again, looking at the issuance of global sukuks versus financial institution sukuk. You will notice again a high percentage of financial institution sukuk come to capital enhancement based Mudarabah sukuk. Again, 2015, you can see, jumped up to 26%. 2016, 17%. And then continued high again, 2018 and 2019. Of the overall 26 billion of FI sukuks issued between 2012 and 2019, an average of 16% of the sukuks were Mudarabah sukuk. This is on the international market for sukuks having tenor of greater than 1 year. So very high percentage, 16% of these were Mudarabah sukuks from financial institutions. Next slide, please. Now moving over to the domestic market, it also displays a similar pattern to that of the international cross-border sukuks. Here again, we notice that the financial crisis pressure increased the volume of Basel III compliant sukuk, strengthened bank balance sheets. Most of the domestic FI sukuks were namely Murabaha, but as you will see later in the structure, on the pie chart, we will show you the makeup of that. Like the previous slide that I showed you on the international, you see that 2014, 2015, we saw a big increase to basically manage the capital requirements for those banks. But then seems to have leveled off and to some extent have slowed down. Next slide, please. Next slide, thank you. This is a very comprehensive recap of Basel III implications on Islamic financial institutions. This slide was produced by IDB dating back to 2011, which lays down the Basel III requirement for Islamic finances. And following this, the next year we saw the financial institution issue the first Tier 1 Sukuk. This is a very detailed and comprehensive slide, and I'm sure our panelist, Dr. Muhammad, may touch based on the Basel III elements. I won't go through it, it's very detailed. You can also see this slide later on IIFM website, but maybe Brother Muhammad can add a few points on this to make it interesting to understand. Okay, next slide, please. Ladies and gentlemen, the balance sheet management and capital ratio, as I explained earlier, played an important part in the Mudarabah Tier 1 Sukuk and outpaced the Tier 2 Murabah-based Sukuk, except for year 2014 and 2017. However, the 9 years that the T1 favored by the financial institution and T2 favored by the domestic came in pretty much at par, around 50-50. So if you take the average over the 9 years, it's 50-50 issuance of Tier 1 versus Tier 2. However, in 2020, Tier 1 and Tier 2 Sukuk showed a market increase while maintaining the 50-50% ratio. Again, this is reflective of what we've discussed in the previous slide, where we saw a spike in 2014 and 2015. But I think here, 2015 and 2015 is relevant in the sense of percentage-wise. The main one is the 2015, which saw 50-50 Tier 1, 50-50 Tier 2. But as far as 2016, we saw the Tier 1 increase to 64%. However, as the years went on, we're back to 50-50 split between 2019 and 2020. Now with the launch of the IIFM Sukuk Al Mudarabah standard, I believe it will undoubtedly will increase the processes for IFI financial institution to issue T1 Sukuk by issuing this documentation from the perspective of transparency, Sharia harmonization, and fire execution. So hopefully it will make life much easier for new entrants to try and use these documents for speedy and transparent processes. Obviously, there's a Sharia harmonizations because of the fact that IIFM's got 12 different scholars covering almost 10 different jurisdictions. Next slide, please. Now, as I explained to you before, this is the makeup of all the Sukuk issuance. What I've identified here is the three dots that you can see. If you add these three dots, it comes to about 50% of the Sukuks there, which are Tier 1, Tier 2. But more importantly, if you look at just the Mudarabah and Murabah, it's 24%. So they're basically equal. Next slide, please. Now, from a GCC point of view, the GCC FI takes majority of the share of the Sukuk issuance, with Asia coming in at just 20%. I think part of the element here is basically the number of Islamic institutions in the GCC is far greater as an individual alone, Islamic banks, versus Asia itself. So therefore, that's one element which has contributed to this 71% of GCC issuance, because here you're basically comparing Kuwait, you've got UAE, you've got Saudi, you've got Bahrain, you've got Qatar. So basically we're combining all of this versus Asia, which is limited to basically Malaysia, Indonesia, and Pakistan. Moving on to my last slide. When looking at the combined T1, T2, once again, we see the GCC financial institutions taking lion's share of the Basel III compliance Sukuk at almost 67%. So either way, whether you look at just the Tier 1 or look at just the Tier 2 or look at combination, GCC has played an important role as far as promoting the Mudarabah Sukuk. And we hope the launching of this will still spur this even further, and we see more issuance coming through under the Mudarabah IIFM documentations. With that, that was a very, very brief and fast and fury presentation to just give you an idea of the global Sukuk issuances versus the issuance of T1 and T2 as a percentage comparison of the overall issuances, to give some perspective. Now, ladies and gentlemen, the time has now come for us to have a detailed panel discussions on not just the market itself, but also the IIFM Mudarabah documentation issuance launched today as to its bearing going forward. So what I'll do is basically would like to start the discussion initially with Brother Kashif, because Brother Kashif from RDB being the first tier 1 Sukuk issuer to come to the market. Brother Kashif, if you would like to share with us some of the challenges and the successes that you faced and the early, possibly difficult discussions with investors, to give some perspective as to how you did your first year Sukuk.
Sure. Thank you. Thank you very much for the opportunity. So let me take a step back in terms of why did we do the world's first Islamic Tier 1 in 2012 as a Basel III compliant fund at that point in time. So, you know, the bank, after the new management that came in 2009, it was a relatively small bank. As you know, people who've been in the UAE much longer than me would recall that Abu Dhabi Islamic Bank was historically a very retail-driven bank. So the strategy changed in 2009-2010 with the arrival of our late CEO, God bless his soul, Mr. Tirad Mahmood, in 2009-2010, where the intention was to change the profile of the bank from a pure retail-only bank and establish a reasonable presence or a good presence in the wholesale banking space. So that was the motivation, and from 2009 to 2012, the balance sheet was grown significantly, most likely, more particularly in the GRE and the sovereign space. And in 2012, early 2012, we were looking at our 5-year plan, that where do we need to be in the next 5 years in terms of asset growth. So that asset growth required to be padded with additional capital. So that is why this discussion started in early 2012 in terms of what sort of asset growth targets do we have and what sort of capital would be required to support this. So this essentially, as you rightly pointed out in your presentation, is the driving factor in most of the discussions, or most of the enabling factors for Tier 1 issuance is driven by asset growth, by the ability to maintain regulatory capital, because asset growth comes at a cost of capital. At the same time, it's a discussion on the cost of capital. The pricing strategy, and I'll talk about it in a bit detail later on, has a massive impact on what sort of capital sources you use, because that has a direct impact on return on equity to the shareholders. And we at Abu Dhabi Islamic Bank are a very return on equity driven bank. So we've issued twice, once in 2012 and again in 2018. In 2012, once we issued, there were no central bank regulations around Tier 1 issuances. And it was very much a case-to-case sort of a basis. So our learning experience at that point in time, and I think we facilitated the overall process as well. The structuring part was, I would not say the easy part, but the most time-consuming part at that point in time was our extreme close cooperation with the central bank to ensure that any Tier 1 issuances marries into the requirements of the central bank regulations that were in drafting mode for Tier 1 issuances. That took some time. So what were the key 5-6 features that we look at when deciding to do a Tier 1? The first one I just spoke about, asset growth, or the growth in the balance sheet. Number two, the three important aspects, and I'll go in by order, is first of all credit positioning, on how you position the credit. before we issued our tier 1 in 2012, we had issued on a senior basis once or twice and had met international roadshows, but there's no continued engagement. So one of the key thought process or exercise that we have, as you pointed out, or how do we market this to investors? What is a credit story? What is a growth story? Why are we coming to them for this capital requirement, and what would it mean for them? So, there was a lot of debate, a lot of internal debate with various stakeholders on effectively positioning of the Abu Dhabi Islamic Bank credit story to investors. We, from a marketing strategy, we chose to go out on a roadshow at that point in time. Those were much, let's say, travel-friendly times in 2012. That we went out, and I think what we did is invested a lot of time and effort, which other banks, I'm sure, benefited from, is really get people comfortable on a couple of things. Number one was, here's a Middle Eastern or a GCC Islamic bank coming out looking for capital. So, people wanted to understand that how does a tier 1 structure marry into Islamic finance, and how are we taking the same sort of instrument profile that we do in the conventional space. I think with the clear guidance of our respected Sharia scholars and the banks and the central bank, we were able to come out with a clear answer on that. So I think at that point in time, there was a lot of time and effort spent on the marketing of the credit, on the structure, and essentially it was at that point in time where we saw that international investors or conventional investors at that point in time really understood that the Mudarabah structure is in line with a capital issuance profile, where simply for it was a pay if you can sort of a mindset. So marketing was one. Number two was, I think, an important decision for us was distribution. So, what the distribution target market for this historically, and similar to the nature of marketing in corporate perpetual issuances, has been private banking investors and asset managers. But typically, banks typically tend to shy away from investing in tier 1 issuances because the capital charge that the central bank allocates to a tier 1 investment by a bank is prohibitively high. So it is predominantly marketed to asset managers and private banks. So that is the same case that our global roadshow at that point in time was primarily targeted towards these two investment classes, where we met not only asset managers, which are typically there in the senior space, but also leading private banks. And I think it gave us a lot of important feedback at that point in time on what are the salient features, which was that are required to make this transaction marketable. The third important part is this careful selection of your lead bank group. Alhamdulillah, we've been privileged enough to work with under good advice from local and international banks, which allowed us to have a very comprehensive marketing strategy, not only in Europe and Asia. And we saw significant interest in 2012 for a transaction. It was more than 6 times oversubscribed or 7 times oversubscribed, if I recall correctly. Then this was refinanced in 2012, where we issued for the first time after central bank regulations had come in. And we were the first issuer in 2018. Again, at this point in time, we decided to raise tier 1 to pad the balance sheet for the asset growth that had been achieved and the asset growth that we were expected to have. Markets were different. The markets had become more mature at point in time. There was a huge debate to going out to get the instrument rated or not. At that point in time, since we were the first bank coming out in the market after central bank regulation, we decided to go on a rated basis. And my colleague would be able to guide later on, if the difference in methodology between the rated and between the rating for a perp. So we decided to go on a rated basis at that point in time. Again, we received significant interest, and I think the documents were tweaked at that point in time further since our 2012 issuance to be aligned with central bank regulation, but continue to follow the Mudarabah concept. So our experience has been that, Tier 1 remains the instrument of choice for Islamic banks and for to shore up capital. Sometimes it is done on a sole basis, or in our case, has to be done jointly along with the rights issue or raising equity from their primary shareholders and then from fixed income investors. But it has remained an effective tool for Abu Dhabi Islamic Bank and other banks in the region to raise or shore up capital for asset growth and to meet capital regulatory requirements. Given what's going on in the market, in terms of a lot of banks had a challenging year, they would need to shore up capital again. You have seen very strong activity in the market. You saw the year starting off with a national commercial bank from Saudi Arabia doing a tier 1. Then you had last week Bubiyan Bank, which raised a tier 1, which raised capital through a tier 1 also. And we are aware of a reasonable pipeline between now and summer. So we expect this space to remain busy in 2021. And, I think the industry players have done a great job in achieving a level of standardization. And I think your efforts are also going a long way in order to ensure that this becomes more of a, let's say, administrative exercise as opposed to spending more time and effort on documentation. So standardization will help improve time to market, improve ability to take care of opportunistic market access windows, and less time and cost to be spent on raising capital through tier 1 issuance. So I think this is all time well spent, and inshallah will further help the Islamic finance industry and their players to effectively play a key role in the development of their various economies by having access and ready access to capital. So that is my feedback, brother, on this, and happy to answer any questions later on or as and when it's required. Thank you.
Thank you, Brother Kashif, for a very comprehensive understanding of your issuance and the market itself. Just one sentence: between your first sukuk and your recent sukuk that you basically refinanced, was there much change in the investor base?
No, sir. It continued to be dominated by asset managers or fund managers and private banks. Thank you very much indeed. Now, every bank has their various, objectives. Sometimes, it's a classification issue. If you look at the deal statistics of the recent Bubiyan Bank Tier 1 transaction, you would see that they had, and they are in front of me, these are official numbers released to the market, that 58% of this was allocated to banks. So sometimes every bank has their own objectives in terms of which, let's say, client base to address, but which relationships to address to show reciprocity where required. But typical arm's length transaction is predominantly we would expect to see 60 to 70% being placed to asset managers, fund managers, and private banks. Thank you. Thank you. Okay, now we've seen the initial launch of Tier 1 Sukuk. Now we move over to Brother Sabir. It looks like he's going to be very busy based on what Brother Kashif just said. The pipeline looks very strong. You better cancel all your holidays, my friend. Okay, now how do you see, Brother Sabir, how do you see the IIFM Mudarabah Tier 1 Sukuk, which is launched today, from an issuer and lead manager's point of view? How do you think it's going to impact and help the industry, or whatever, your views?
Thank you very much, Brother Ismail. First of all, Kashif has covered very comprehensively all the angles from a distribution perspective, from a issuer perspective, from a how to get to the market. So, and I would just add one point to that before I come to this question. I would. For Tier 1, from a Tier 1 issuance perspective, there's a major role played by central banks also, because central banks do approve these issuances and the structure of these issuances from a commercial perspective. So we saw added issuance and Central Bank of UAE approving that issuance, and then later on, many other central banks in the GCC, including Kuwait, Saudi Arabia, Qatar, Bahrain, have approved tier 1 issuance. And basically that's commendable, because from an Islamic bank's perspective, it's very important to give level playing field to Islamic banks compared to their conventional counterparts when it comes to tier 1 issuances or raising capital or deploying excess liquidity, SLR requirements. So this is, I just wanted to say that central banks have played a major role in the development of the tier 1 market in the GCC from a Sukuk perspective. Now, as far as IIFM standard documentation is concerned, I would definitely say that it is very useful to have a standardized document, because more or less we have seen so many tier 1 Sukuks coming to the market from different geographies, including UAE, Bahrain, Qatar, Kuwait, Saudi Arabia as well. And if you look at the Islamic structure followed and the legal documentation, more or less it is similar. All the issuers have used Mudarabah structure for their tier 1 issuances. All of them have more or less at the point of non-viability, there is either write down or conversion into shares. Of course, I would add that in this region, mostly it's write down at the point of non-viability. So that's common across all the issuances. So in summary, the structure is more or less the same. And with the standard document from IIFM, it has given the industry and the issuers an advantage to hit the market as quickly as possible, because it cuts down, it enables quick turnaround of legal documentation. It helps with the issuer understanding that everything is standardized and there is more or less no negotiation on that. It helps the rating agencies as well to understand the document and rate it as quickly as possible. So from all in all perspective, I think the quick turnaround time will really boost the market and will help the issuers end of the day to hit the market as quickly as possible whenever there is a need to raise capital. So I think definitely it's a major contribution towards the betterment of the industry.
Thank you. What I'll do is basically I'll go around the panels first and then come back with second questions later on as well to give everybody a chance and to basically worried about the timing as well. Okay, now moving over to my dear friend, Dr. Omar from Malaysia. Doctor, given that you have had the privilege to review the IIFM Tier 1 Sukuk Al Mudarabah documentation, what is the plus point from the documentation as well as from perspective of global adoption of the IIFM standards? And there's another question to that which I will add anyway, because of the fact that Brother Ijlal briefly mentioned governing law flexibility. You may want to also briefly comment on the implication of adopting English law with other European continent, etc.
Thank you very much, Ismail, and I thank my co-panelists. I would like to begin by thanking the IIFM management team for inviting us to discuss the publication of the IIFM Tier 1 Sukuk Al Mudarabah standard documentation template today. I personally feel today marks another significant milestone in the history of Sukuk issuances and the concerted efforts of IIFM and other stakeholders to take the Islamic financial services industry to the next level. It seems the implementation of the Basel III rules relating to capital requirement has led to the benign innovation in the Islamic finance landscape. You know, we talk about benign innovation here because again, there's a lot of financial engineering, you know, put into these efforts of the IIFM and other stakeholders. We should encourage and actively support more innovations in order to deepen the development of Islamic capital market. And as a matter of fact, this is more relevant in difficult times where financial institutions are struggling to cope with the negative effects of COVID-19 and the potential protracted liquidity stress among financial institutions. Even though I've been told to focus on one or two legal issues underpinning Sukuk legal documentation, and I'll be saying a few words on the governing law later. But I guess Bro Ahmed Choudhry from Clifford has provided a comprehensive review of key legal aspects of the documentation. So I won't actually go into other aspects for today. I'll just focus on the governing law. Now, given the limited time I have today, I would like to focus on the issue of government law and how the IIFM's flexible approach will enhance the global adoption of its standards. But before that, let me begin with the issue of potential global adoption of the IIFM standard. I think this is very important, and it's a bit linked to the issue of the government law when we talk about global adoption. Adoption, basically, people talk about the legal structures, whether you have a trust model in particular jurisdictions, particularly continental Europe, where you do have the civil law kind of tradition. And for me, again, I know most of us are familiar with some of the structures and some of the developments, even in Luxembourg and in France. But again, before I go into that, I think just as other IIFM standards have been widely adopted among Islamic financial institutions across the world, we actually expect the industry to adopt the new standard documentation. I would like to start with this premise. We expect global adoption. However, on the issue of the seeming dichotomy between the English common law and the civil law in continental Europe and the quest for standardization, it is always appropriate to allow parties to determine the governing law clause of their contract. This is the essence of party autonomy, and it is sacrosanct, basically, in legal documentation, particularly for cross-border transactions. And again, we have seen the IIFM's approach, which is that of flexibility, even though the default rule here is the English law, and the documentation actually was drafted based on the English law. Of course, regardless of the significance of party autonomy, and as highlighted by Bro Ahmed earlier in his presentation, I can confirm that the IIFM template Sukuk Al Mudarabah documentation does not contain a purchase undertaking, and I think he explained this already here, because again, I want to actually say this before we start getting questions on purchase undertaking and the issue of Dana gas case. So I think it's good to clear that now, and I'm sure from the written perspective, Dr. Ahmad, Dr. Mohammed Damak will be saying a lot about this because he reviews all the transactions. I mean, most of them you have in the industry here. And as a matter of fact, there are express prohibitions, you know, in the documentation regarding the issues of guaranteeing, you know, the profit. You know, this is something that should not be acceptable. I mean, in Mudarabah, and I think the IIFM has done a great job in looking into some of these specific issues from not only the Sharia perspective, they look at it from the regulatory as well as the legal perspectives. And I would like to briefly now comment on the significance of the governing law clause chosen by the IIFM. Again, as I said, this is quite important as it could be a major sticking issue, you know, while adopting the standard for Tier 1 Sukuk Al Mudarabah issuances. Even though the IIFM template Sukuk Al Mudarabah documentation is drafted under the English law, IIFM included a disclaimer to the effect that users of the documentation should ensure that the documentation and the underlying transaction are compliant with not only the laws of a particular jurisdiction, but they should also be enforceable, because there are two key things in any transaction, particularly in cross-border transaction. Compliance and enforceability is very important, and I think this is clearly clarified in the documentation. So it is advisable for users to obtain their independent legal opinions in each jurisdiction, as law generally is jurisdiction specific. There's a question on this I saw in the Q&A chat, you know, earlier, you know, somebody was asking whether there's a need to actually have legal opinions from different jurisdictions. You know, this is key, and that's why the IIFM itself did not actually provide legal opinions from different jurisdictions. It's something impossible, I mean, to create this. So I think this is quite important, and I think the approach adopted by the IIFM is a welcome development. Now, let me say a few words on the governing law and jurisdiction clause. As it is generally adopted in DCM documentation, a hybrid dispute resolution clause is used, and it is drafted in a way that allows for general adaptation to any jurisdiction. And I think Bro Ahmed, again, being the main person, you know, who held the pen while drafting the documentation, emphasized on this as well, that it's jurisdiction specific, and some jurisdictions you may just have to adopt arbitration, and it all depends on your choice. And sometimes you may actually have to build in some kind of processes like mediation even before you move on to arbitration, then ultimately giving you know, the trustee or the, you know, the investors the right to actually go for litigation. I think this is clarified in the documentation, and I think users should be rest assured that all these aspects have been handled by highly qualified professionals and one of the top law firms in the world. And As correctly noted in the footnotes of the IIFM documentation, English law remains the benchmark for Sukuk issuances, and I think we've said this several times. This could also be interpreted as English-style legal systems, such as Malaysian law. So if you adopt the Malaysian law, even for this kind of documentation, you may not be changing much, basically, ultimately, because I mean, you do have a lot of jurisdictions across the world that are based on English law, and generally the principles are similar. But I think it's important to pause here and address the issue of securitization, which is a common law legal kind of fiction. You know, the question we should ask is whether the securitization model for Sukuk will be acceptable in civil law jurisdiction to ensure global adoption of the IIFM standard. While I understand this issue has been discussed in several forums across the world, I think its relevance in the global adoption of IIFM standard documentation requires some brief comments today. Generally, I really don't want to go into specific details, but again, I believe most of us are familiar with the securitization structures you have in Luxembourg. France actually tried to introduce, you know, an amendment to the French Civil Code in 2007, but again, the Constitutional Court actually struck it down, and that did not see the light of the day. But again, the most popular one, which we always refer to, is the securitization model you have in Luxembourg. And that actually came as a result of the Securitization Law 2004. The law contains broad definition of securitization that is more inclusive in its approach. So any transaction which adopts a securitization vehicle that issues transferable securities such as bonds and sukuk will fall under the law, provided there is an opt-in provision in such documentation. The model is similar to the English trust model. Without going into further details, I think it suffices to say that some civil law jurisdictions such as Luxembourg do have flexible and robust legal environment that allows for some sort of convergence of law. When I say convergence here, I refer to the convergence of civil law and the common law. The trend we have noticed in civil law jurisdictions such as Luxembourg, particularly in Sukuk transaction, is that of you know, the declaration of trust model. They still have this in a way, and the certificates as well as the declaration of trust are governed by the English law. However, for all other agreements, their preference is the local law, that is Luxembourg law. And again, you will all recall that Luxembourg issued a 5-year sukuk of 200 million euro in 2014. I think it matured in 2019. For that particular sukuk, the governing law for the purchase agreement, the lease agreement, the servicing agency agreement, the purchase and taking, substitution and transfer of the taking, the agency agreement were all governed by Luxembourg law, while the declaration of trust and certificates actually were governed by the English law. So my conclusion on this point is that the documentation being released today from IIFM will also be adopted in civil law jurisdictions. I do not see any contradiction. It is also likely that some financial institutions who intend to issue Tier 1 sukuk could choose to adopt English law as the governing law for the capital market documentation while using their domestic law for the Mudarabah agreement itself, provided they ensure that there are no fundamental amendments of the Mudarabah agreement by domestic legislation. And as required by IIFM, there should be in place a Sharia supervisory committee for the duration of the sukuk until it is fully settled. This element is very, very important. And as it was shown earlier, when Basel III rules introduced the core Tier 1 capital, the Islamic financial engineers needed to go back to the drawing board to develop Sharia-compliant contingent capital structures. We do need more of such Sharia structures and accompanying documentation that are primarily based on core Sharia principles. And on a final note, we welcome the standardization of the documentation efforts of IIFM. I would like to recommend the template, Sukuk Al Mudarabah Tier 1 standard documentation to all participants in the Islamic financial services industry for adoption. Thank you.
Thank you very much, Dr. Omar. It was very interesting to hear from you as a legal expert as well. You know, your background is being a lawyer, but you're a frequent issuer of short-term paper. I appreciate your input there. Now moving over to our last panelist. You're patiently waiting for it, Dr. Muhammad, but I think it will be very interesting to hear from you from a rating agency perspective, especially S&P rates many sukuk, as to how, first of all, there's two elements. First of all is basically how different is it to rate a tier 1 sukuk versus a conventional normal sukuk? And then the 2 is, how will this mudarabah tier 1 sukuk or tier 1 sukuk will help the rating agency?
Right, excellent. Thank you very much. So I'll start with your first question. How is rating this instrument different from rating a senior unsecured sukuk? I would say it's completely different. We apply completely different criteria. So for this kind of sukuk, we would apply our hybrid criteria. For the senior unsecured sukuk, we would apply our sukuk criteria, which have been developed specifically for the sukuk as an asset class. Now here, for the tier 1 sukuk, in most of the cases, we would start from the bank standalone credit profile or the unsupported rating of the bank. As you well know, the legal documents of these instruments, including the IIFM standard documents, make it clear that receiving government support under these transaction would be considered as a non-viability event and would trigger the write-down of the instrument. So we start from the standalone credit profile of the institution, and then the approach is as following. So we take 1 notch down for subordination, and 2 notches if the standalone credit profile is in the sub-investment grade category, and then we take 2 notches for the instrument qualified as a tier 1 in a Basel III jurisdiction due to the non-payment clause leading to coupon non-payment, whether it's discretionary or mandatory. And we finally deduct another notch if there is a mandatory contingent capital clause leading, for example, either to common equity conversion or to the principal write-down. Again, in the GCC, as my fellow panelists said, it's mostly about principal write-down rather than common equity conversion. So on average, the rating of these instruments is at least 4 notches below the bank standalone credit profile. And now, if you consider that there is between 2 to 3 notches of support typically incorporated in the final rating of a bank in the GCC due to the consideration of government support in case of need. So for example, in the GCC, we classify Saudi Arabia, the UAE, Qatar, and Kuwait as highly supportive regulators. And we expect that in case of problems, there will be some support extended to the systemically important banks. So for the banks operating in these 4 systems, typically there would be between 2 to 3 notches of support incorporated in the final rating. Now, if you take that out, if you add the 4 notches of difference between this instrument and the standalone credit profile, you would end up typically with an instrument that would be rated 6 to 7 notches below the rating of the banks. And that's why typically banks do not come to rate these instruments. I think the only bank that was brave enough to come and ask for its hybrid instrument to be rated was First Abu Dhabi Bank in Abu Dhabi. This was a conventional instrument and not an Islamic instrument. The bank is rated AA-. The instrument was rated BB+, which means 8 notches difference between the instrument and the issuer credit rating on the institution. Now, coming back on the standardization debate, again, I think standardization is still one of the major hurdles that the Islamic finance industry is facing today. And it's a reason why issuers do not go naturally to the Sukuk market when their financing needs increase, apart from the issuers that are obliged to go to the Sukuk market, such as Islamic banks, for example. But for sovereigns, typically when you compare the 2 processes of issuing Sukuk and issuing bonds, they would naturally go to the issuance of bonds because it's much less cumbersome from an effort and time perspective. Now, and besides the effort of IIFM, I think which definitely help in having standard legal documents in place, we have seen the Dubai Islamic Economy Development Center teaming up with various stakeholders to come up with a unified code for Islamic finance. Now, depending on the outcome and to what extent it will be adopted by the market, this could resolve the issue of standardization. And the final point that I wanted to make is that the process of standardization has to be inclusive, with as much as possible stakeholders involved, in order to make sure that the requirements and the views of all the stakeholders are taken into consideration, and to avoid coming up with standards that would either be non-applicable in reality or that would be completely disruptive to the market. Thank you, and back to you.
Thank you very much indeed. Before we go to the questions from the participants, I'm conscious of the timing as well. Is there anything else you guys want to mention before I put one more question generally? No, no, okay. So basically, IIFM standardization has certainly helped the industry in coming forward with a standardization that is transparent and inclusive. Now, one element which was basically highlighted in today's Mudarabah Tier 1 Sukuk documentation was the fact that not requirement, but recommendation to have a Sharia monitor the activity during the life of this, or the life of the transaction. I particularly favor that personally, and being involved in the Khazana Sukuk many years ago, we had put that in place as well, because to make sure that the elements are monitored during the life. Has there been much so far in the marketplace about monitoring over the life? Anyone? I'm open questions rather than being specific because of time constraints. No?
I think if I may, maybe if I can, yeah, please go ahead.
All right, thank you. If I may add a response to this one, obviously when we are talking about Tier 1 Sukuks and it's additional Tier 1, so it's primarily Islamic banks who are issuing these Sukuks. So in any case, Islamic banks have their own Sharia board who manage their business. And even from an Islamic structure perspective, a Mudarabah concept is where funds are given to the Mudarib, which is the bank, to invest in their business. So they are already managing their business from a Sharia perspective, and this pool of money gets added or commingled in the capital of the bank. So specifically for Tier 1 Sukuks, I think already the Sharia boards of the issuers or the Islamic banks is there. So we effectively do not need to put another Sharia monitoring process on top of that, because it's being monitored effectively by the Sharia board of the Islamic bank issuing this.
Madam Ahmad, you were going to say something?
Yes, if I can add, I think it would help the credibility of the instrument. I agree that it's done as part of the regular monitoring of the institution issuing the instrument itself, but it would help, and it would minimize risks that someone wakes up one morning and say, okay, my product is no longer compliant with Sharia, I'm not going to pay. And I noticed that in the legal documents, there's a clause that talks about that, and that makes it almost impossible for the issuer to come back after the issuance of the sukuk and question the Sharia compliance of the instrument in a manner that would be detrimental to the investors, which I think is an important consideration given what happened over the last couple of years with one sukuk in the region.
No, I agree. I totally accept that basically that there is a Sharia board of the banks, but as an independence, number one, and number two, is there any requirement to have that Sharia board report to the sukuk investors? That was basically trying to understand. Okay, I'm sure as the market develops, more changes will happen and strengthen the overall Islamic finance industry. Now, we've only got one question so far from the market. I think it's more of a, oh, it's gone. Dr. Omar, did you answer that?
Yeah, I answered it directly. I don't know. Yeah, I've been answering questions using the Q&A chat box.
Okay.
So I think it was actually a question regarding the UK as kind of a jurisdiction, for Sukuk itself. But we've not been actually seeing many issuers using it as a forum to issue. Basically, people run to Cayman Island and other jurisdictions. So this is something someone asked, and I said, well, this is something important. or I guess issuers know why they prefer to go, offshores, basically. But again, I think this is something to explore here.
No, thank you very much. Look, I saw that question and I just went back and it was gone. So I see we've answered it.
Yeah.
Okay, thank you very much. Now, my panelists, I'm very, very happy with all your responses. I'm very happy that you joined us to support IIFM and promoting the IIFM standardization processes. We look forward to having you again in the future to support other initiatives. As Brother Ijlal mentioned early on, there's possibly 3 other Sukuk initiatives that could come forward, or there could be others. Again, once again, thank you very much indeed. I hand over to either to Brother Ijlal or Sheikh Ahmed.
Thank you very much indeed to all the panelists, Brother Ismail, Brother Muhammad, Sabir, Dr. Umar, and Brother Kashif also. It's been, inshallah, a good discussion, really benefited. I'm sure the listeners would be also benefiting from this. And like you said, I mean, sometimes virtual works well in some cases. So alhamdulillah, we are able to at least do, and we also hope that in person also is also helpful. So the way things are at the moment, I think we are looking more on the virtual, but I hope so that we can do in person as well. There is one question maybe that can be taken. It just about the Sharia, centralized Sharia boards. So in that case, what happens on IIFM standards. So generally, we have seen, and if any panelists like to cover this point, Brother Ismail, on this, last question which came. So So that's the last question. Various countries have centralized Sharia authority as IIFM Sharia process taking account to ensure wider acceptability. Okay, I will naturally when we look at this, I will answer. Is in terms of wider Sharia acceptability. Of course, that's why we refer to Sharia academies and also AOFI standards on Sharia and others. So we do look into the wider acceptability point of view in all our standards. And alhamdulillah, whatever standard 14 of them now, IIFM is produced. We didn't have any issue in terms of wider acceptability point of view. So that is when we do standards. Naturally, these are global standards, and we try our best to have a wider acceptability, and alhamdulillah, we have been achieving that. Whatever we have produced so far, of course, there's some time we do some reviews also. Occasionally we check that, but there's nothing really, even the complex document like hedging didn't require really any major amendment or any amendment, I would say. There were a few minor one which we looked at it. But there was just one or two, but generally what we produce are widely acceptable basis. So this is, I hope, this last question, I have answered that. And then lastly, I think since we've been sitting for some time now, so would like to just, mention a few things. Of course, the thanks is always due, which I really like to thank everybody who joined us. And then we will also, these documents are available for, so market participants on our website now. The presentation will be also available either today or tomorrow. And also the recording also will be available. Of course, the volume, for website sometime, the entire recording, takes time to play, but we will be also placing it. With that note, I think we are safe to end this launch of our webinar of IIFM Sukuk Al Mudarabah Tier 1 documentation standards, and we look forward to, inshallah, converging again. The next one would be, before that, we do have some working groups and all, but naturally not event like of this nature. But next one would be, inshallah, on the launch of IIFM Sukuk report, where we are now finalizing, and it would be, our plan is, inshallah, We have a number of contributions, and it will be the 10th edition. So next event, which I see again would be webinar, would be launch of IIFM Sukuk report. We are trying our best to have it in June, if not July for sure, but June looks like we will be welcoming you back again. IIFM also recently, many of you would know, has published a white paper on IBOR reforms, which is a major issue, and we are now working on that specific subject, which we hope we will be able to also contribute from IIFM perspective, and if there is something for others like AOFI or IFSB, I'm sure they will be also tackling that major reform which is taking place now globally, which initially benchmarks are used in Islamic finance, and of course we do have to keep our industry aligned and have those sort of solutions if they are required, or those amendments in the documents are required to be covered. So that's something which IIFM is working on. We did have our webinar in last year on 24th November, and I hope on these subjects also you continue to support us. And the main thing is really working together in the industry, and I think that's the critical thing. With that note, once again, thank you all. Jazakallah khair. Assalamu alaikum wa rahmatullahi wa barakatuhu. Inshallah, till next time. Barakallah feekum.